what's wrong with you? Why are you working on residential deals? You should get into commercial. Why commercial investing beats residential. He in that coffee shop makes more money than the entire shopping center, but in commercial real estate that happens all the time. 100 houses, you'll have 100 problems. Giving you kind of a sad reality of my life back then. Taxes went through the roof. Here's how you can monetize this. If you want to build massive cash flow and get financial freedom, and you have a choice of investing in residential or commercial, I'll tell you 5 reasons why commercial investing beats residential. Now you might say, Rafik, commercial has more risk, commercial is more complicated. And in this video, I want to break it down and explain how you can benefit from at least understanding what commercial estate is and how you can build passive cash flow from investing in value-add deals. I've been a residential investor for about 15 years before I transitioned into commercial real estate. After I closed on my first deal, and I got lucky because my mentor guided me through the deal and I made about $1 million. Before that one transaction, I ran a full-fledged residential flipping business. Many of my residential tenants, they're just difficult. When I did the first deal, I immediately started looking for second, and I slowly exited residential investing as a result. I've seen that happen to many of my friends. And I realize today that for any of you who are very good investors, whether you're in residential investing or investors by and large in stocks or equities or crypto, listen to this video to understand how to curb the risks associated with real estate and how to avoid them. Most important reason why commercial real estate investing is better than residential is because commercial real estate investing is always valued based on its income. Of course, there's a comparable analysis for a value, and then there's also a replacement cost value, but biggest emphasis is on value. So in other words, if I bought a property today, let's say an empty restaurant for $400,000 or $500,000, if I bought a lot and I want to develop a Dunkin' Donuts or a Starbucks or a gas station, the profit margin differential is so much more significantly higher than residential, because residential properties, they're all sort of go in weighted averages. Values, you cannot sell a house on a street with $300,000 houses for $1 million. But in commercial real estate, that happens all the time because of the length of the lease, quality of the tenant dictates how the value happens. Okay, so number one is commercial valuation is from NOI. What is NOI? NOI is how much profit does a property generate per year after paying operating expenses. NOI is calculated by taking all of the rents, subtracting taxes, insurance, utilities, maintenance, and what's left at the bottom gives you NOI. Now, NOI is not cash flow. Cash flow happens when you take the NOI and you subtract your debt service, which again, debt service is your total cost of mortgage payments for that same year. So if your NOI, let's say, is $100,000 a year and your debt service is $70,000 a year, your cash flow for that year will be $30,000. Here's the very important thing about commercial valuations, right? You control the value of the property by negotiating leases. And if you understand how to structure leases, for example, we have a little value add system here. We roll out a red carpet treatment to our tenants. Anytime a tenant comes in and they say, well, look, we want a door installed, we want a roof replaced, we want offices built, we love those requests, because then what we do is we invest, let's say we invest $100,000 into somebody's tenant improvements. Naturally, what we say to our tenant is like, look, if I'm going to invest $100,000 with you, I'd like to get that money back. Is that fair? Because I'm trying to help you with your business. Well, of course it's fair. They will usually agree to it. Can I recover that $100,000 I gave you, interest-free by the way, I gave it to your business, but in my building, can I recover that over the course of our lease? And most of the time, tenants will have no problem saying, yeah, of course, what is my rent gonna go up by? Well, if we do a 10-year lease, $100,000 of improvements is about 10 grand a year. 10 grand a year multiplied by 10 years is 100,000, but 10 grand per year is about $800 per month in increase for our tenant's rent payment. So now, get this math, okay? If I have a $100,000 tenant improvement in any property, right? And I ask them to recover 10 grand per year, first of all, so if I say 10 years, which usually they say 5 years, and in the case of 5 years, their rent goes up by $1,600. It's actually even better for valuation of the property. But let's say 10 years, okay? If I increase my net operating income now, by the way, will go up by $10,000 a year. And if I have a 6 cap property in this scenario, because if I have a 10-year lease, usually they're gonna stay there for 10 years. That means my cap rate will be lower. And if I have a 6 cap valuation on this, so $10,000 per year, if in fact I spend $100,000 and my rents went up by $10,000 a year, and the $10,000 is what my net operating income goes up by because it's now extra money, the value of the property just increased by $166,000. So here's what that means, guys. If I sold the property immediately after I signed that lease, I'll make $66,000 profit just from that one lease. Imagine if I did that on 10 leases. If this is gonna be 5 years, then the value increases even higher. But then your cap rate will be a little higher as well. In commercial real estate, moral of the story is that the more money you invest in your tenant, the higher the value of the property, provided that your tenant is solid, has a good business, and will not fail while the lease is in place. And this is where you have to underwrite your tenants correctly. We're doing a deal right now, and we're buying a property for $1.275 million. We are negotiating a lease with Hertz Equipment Rental at the moment, and we're very close to signing a lease at about $17,000 triple net. Triple net means that the tenant will pay you $17,000 a month, and then they'll pay all of the expenses related to the operation of the building, like taxes, insurance, utilities, maintenance, all that stuff by themselves. The only thing you're responsible to pay on a triple net lease is your mortgage. If I'm buying the building for about $1.3 million because I have closing costs to pay, but I have about $200,000 of net operating income, then at about 6.5 cap or 7 cap valuation, because it's a national company, I can actually sell the building. Our valuation is coming in at about 2.8 million. So we bought the building for 1.3. We're gonna pay the broker a very, very good commission. When the brokers bring us a really good lease, we go over and above to compensate them because we want them to work with us and build a long-term relationship. So in this case, we offered our broker not 6, but 8%. If you're a commercial broker and you want to work with us, please connect with me. I'd love to work with you on your tenants, by the way. Let's say our basis is about $1.5 million. The value of 2.8, that's $1.3 million deal. And the minute we sign the lease and they move in and they start paying, we could list it and sell it for 2.8 million. After commissions and everything, we can make $1 million. If you're a really good commercial real estate investor, if you understand the game, if you understand how to find deals, how to raise capital, you can do deals like that potentially. You got to understand how the game is played. Second reason why commercial investing beats residential is very simply because most of the commercial leases are written on a triple net basis, which means the expenses are covered by your tenant. In residential real estate, if you buy a house, if you buy a duplex, if you buy an apartment building, you pay the taxes, insurance, utilities, and then you collect the rents. In the past 3 years, because of inflation, because of some other issues, taxes went through the roof. They're increasing taxes in Minneapolis by 10 to 15% per year, which is really, really high. Insurance costs have gone up, especially in states like Florida. So if your expenses go up aggressively and your rental rates are kind of stagnated, you basically lose your value of the property because your income drops. In commercial real estate, you have tenants paying all the expenses, and if at the end of the year you paid more expenses that they were giving you, they will reimburse you. If you actually saved on expenses at the end of the year and you spent less than what they were supposed to pay for, you have to reimburse them. It all depends on who's paying for the expenses, but ultimately, either they pay directly to the county and stuff, or we pay it and then they reimburse us. Either way, second reason why commercial real estate is way better than residential is because of this phenomenon. Commercial tenants pay operating expenses. Here's how you can monetize this. Usually, when we buy value-add assets, there is especially from guys that rent residential properties, they would sign gross leases with their tenants. And when they sign gross leases and they don't really change it, and they don't really raise rents aggressively, their expenses go really high and they're too nice to their tenants and they don't really improve the property. You have a bunch of gross leases that don't really cover the expenses. Your building loses value. We buy that property, we clean it up, we improve the roof, we put asphalt on it, paint everything, make it really nice, and then we either increase the rents on our current tenants to reflect the market rents, and we ask them to do triple net leases. And if they don't agree to triple net leases, we usually say, look, our policy is to have a triple net lease because that's the way commercial real estate works. It's industry standard. Usually, if we sign a triple net lease with a new tenant, what happens is it becomes more desirable piece of real estate. Your property increases in value because cap compression. If you sold a building and all the leases are triple net, people pay you higher dollar amount than if you if you're selling a property and half your leases are gross and half your leases are triple net. It's a very important thing to notate. For example, we bought a building in Little Canada, 25,000 square foot shopping center, 50% occupied, bunch of gross leases. The residential investor, very sophisticated residential investor, by the way, bought the property, but he's kind of done it with the residential approach. And unfortunately, the taxes went up, expenses went up, but his rents didn't go up as much. We bought it for $1.7 million. Immediately after purchasing it, we redid the asphalt, we redid everything around it. We started marketing it. We went to each individual unit and white shelled them, made them really nice and presentable. And we leased everything on a triple net basis at $12 to $15 triple net. $12 to $15 triple net, what does that mean? The tenants pay us $12 of base rent, and then on top of it, they pay what's called CAM charges. CAM stands for Common Area Maintenance Charges. And those charges usually cover all of our expenses that the building comes with, taxes, insurance, utilities. As a result, we spent about $400,000 on the building, and I just checked the tax returns for last year. Our NOI last year was about $310,000, and at 7 cap, that building is close to $4.3 million valuation. So the value has increased from $2.1 million cost basis to about $4.3 million value. And if we sold it right now and distributed our profits to our investors, they'll be really happy because they will almost have tripled their investment on that one deal. Commercial tenants pay all the operating expenses usually, and if they don't, you want to make them pay it because that's the industry standard. Before I started investing in commercial real estate, I met my mentor, and he says, Rafik, what's wrong with you? Why are you working on residential deals? You should get into commercial. And I said, it's easy for you to say. You're rich, you got all this money, and I don't have the capital or experience to do it, but teach me, I would love to learn. And he says, there's many reasons why commercial is better than residential, but one of the main things is you're surrounded by so many entrepreneurs. You get to learn about so many business models. Now, here's what happens. You buy a shopping center, you buy an industrial property. A guy comes to you and says, I want to open a coffee shop. I want to open a distribution company. I want to open a metal fabrication company. What happens is, first of all, you meet an entrepreneur and you try to develop a relationship with them. These guys are sophisticated, solid, they know what they're doing, hopefully. And when you sign a lease, you have to underwrite his business and make sure that this business works over the term of the lease. So you learn so much. Your level of understanding of the business models increase, but mainly you develop relationships with a bunch of entrepreneurs. And guess what entrepreneurs want? They all want to invest in real estate. And so not only do you get a lot of friends that are in business like you are in business, but also you get relationships with people who could potentially be your investors. Now, so the quality of tenants is way better because you're dealing with professionals, you're dealing with people who are usually top 1%, they're high net worth individuals. And the other thing is you learn a lot about different business models. So that's a really, really good point, and I want you to remember that. Better quality tenants. So for example, when we bought a property, this same property I was talking about earlier in Little Canada, one of the tenants had a tobacco store. For some reason, city revoked their license. I think, I don't remember the drama associated with that, but it was a very sad situation for him. We talked and he says, look, I really want to get into coffee shops. I want to open a coffee shop. Now, I didn't really believe that coffee shop investment from us would be substantiated. I don't know much about coffee shops, right? So I said, look, if you want to do a coffee shop, I'll give you 6 months free. You don't have to pay rent. Build out the coffee shop and I'll be happy to do it. The rent will go up by 20% and whatever, we signed everything. And I said, since you're investing so much in the building, I want you to feel like you own it too. Why don't you, buy some shares? And he was interested and he bought 10% of the shopping center from us, from our investors. And so now he became an owner partner with us and the coffee shop tenant. Since then, he has invested in multiple other buildings with us. He's a personal friend now, and he invests capital in many deals, and then he also opens coffee shops in all of these locations. For me, it's a blessing because not only do I have a investor who wants to put money to work, but he also wants to occupy the building. It's best of the best. Then the other thing that happens is that you can actually impact the value of the property by having that tenant pay more. Here's what I learned about coffee shops, by the way. He in that coffee shop makes more money than the entire shopping center for us as investors. He claimed in the beginning to have been making $20,000 a month in pure profit from that one location. I was blown away. I was like, how? How much coffee do you have to sell to make 20 grand a month in profit? Well, he showed me the math and whatever, and I was really surprised. I said, now, next time, I would like to invest in your coffee shop too, because if I'm a owner of the building and we own the building together, how come I should also maybe invest in the business as well? So you get to learn about other businesses, but also get to invest in them, and they're all in your building. Another reason why commercial investing is better than residential is because usually you deal with bigger assets, you need to raise money, and so you basically fall into an environment of high net worth individuals. You effectively will be surrounded by a bunch of high net worth individuals who would potentially invest with you because that's what the business demands. Exposure to high net worth individuals and their capital because of what you do precipitates opportunity for you to do bigger things. In my residential business, I owned the business. I borrowed money from hard money lenders and from some private people. There's much more liquidity to buy and sell these properties, which makes it easy to get in. Commercial real estate is harder to get in because of the biggest moat for entry for regular guys is that access to capital. But here's what I'll tell you guys. Here's a secret. Once you do one deal, just one deal, and you do really well on it, it precipitates a second deal. What I call it is first deal is down payment on the next one. And if you have an investor or two invest in your commercial deal, after the first deal, you get this aha moment. First of all, you made way more money. Second of all, your partners, investors made money. You double down and you do more. So all of a sudden, from making, I was making $600,000, $700,000 a year before I started getting into commercial. On the first deal, we made $1 million. I was like, wow, this is crazy. Second deal, third deal, fourth deal. And as we continued doing residential flips, buying duplexes became sort of a expensive hobby that took me away from making real money. All I'm asking you residential guys is to give it a try, look into commercial investing and just do one deal. Don't worry about building a $100 million portfolio, but you do one deal, learn, get a taste of how to work with commercial tenants, understand triple net deals, buy a small shopping center, buy an office building. Right now, office buildings are sold at such deep discounts. And don't be worried too much about the tenant risk. As long as you buy it at the right basis and as long as you price it correctly and you take care of the property, you'll be fine. I mean, in our community, Value Add Network, we do a lot of deals and we have coaching and we help people to sort of borrow confidence from me and from my partners to get into their first deal. If you want to learn more about our Value Add Network, please click on the link below for more details. Getting better quality of people around you, the tribe you associate with, improves substantially when you get into commercial game. One of the reasons why commercial real estate beats residential is basically ability to scale. When I was running my residential portfolio and residential house flips, I had properties on opposite sides of town. I had 12 flips going on at the same time. I would go here, I go to Home Depot, pick up materials and drive around. Basically, it's time consuming, and from a systematic perspective, it's harder to scale that business. Nothing wrong with residential business, by the way. I think it's a really good stepping stone. But if you want to scale, I remember thinking, these guys are doing 100 houses per year. And I wanted to get to that level. I was talking to some people in the industry, and I looked up to these older, more mature residential guys. And I was like, man, I have a dream. I want to have 100 houses. On each house, I'll make $300 a month cash flow. That's 30 grand of profit per month. And then that's my destination. And Alex is like, man, you got the wrong dream. 100 houses, you'll have 100 problems. Because here's what my blind spot was. Yes, you might make 300 bucks on paper, but what happens in a year of people living in the house, things go wrong. Repairs and maintenance was the biggest problem for me, because every time they moved, I had to go and clean the house, paint it, and because I was in these C, D areas, as opposed to A+ areas, I had people moving out every 1 or 2 years. So if I had made 300 bucks a month, which is 3 grand a year, every turn of a house cost me $3,000 to $5,000. Paint, carpet, they will destroy cabinets. I was constantly lying to myself about the cash flow. On paper, it looks good, but in reality, there was never money left. And the only money, if anything, I would make by appreciation. So I had to wait. And so you live in that feast and famine lifestyle. So let me give you an example of what I had to go through. So I had around 55 houses before I bought my first commercial property. And I made about 300 grand a month in cash flow on paper. So my cash flow was supposed to be 16,500. Here's the problem. About 5 to 6 tenants were constantly late, and I had to do evictions. And my evictions cost me about $1,000 plus my $300 cash flow assumed everything was perfectly humming. But basically, with maintenance, repairs, and everything, my profits got eroded to where I would lose, if I had 5 evictions going on, that was basically 5 grand in legal fees. Sucks. I hated that. I don't want to evict anybody, but they don't pay rent. What am I supposed to do? I'm paying my mortgage and everything. I would have to turn these units. And then there was a non-payment. So they would probably not pay for a couple of months. So on 5, no rents for 2 months. And if the rent was $1,500, you're talking about at $1,500 per month, roughly is what these houses were renting for back then. Just giving you kind of a sad reality of my life back then. So I would have loss of rents of roughly around 15 grand because these 5 people who are constantly being chased out, evicted, because they just, maybe I did a bad job of pre-screening them or whatever. There's always issues, right? Maintenance is on top of it, was always a problem. Ultimately, you can see I was losing money. But on my first commercial deal, after I closed on it and we did some work, I consistently made $7,500 a month, and there was no evictions. And as I filled vacancies, then I went to $10,000, $12,000 a month. And what's interesting, somehow, maybe I got lucky, but we have a portfolio now. Everybody paid, and our cash flow was consistent. Everybody paid before the 5th. I don't have to chase anybody because most of my tenants were professionals. So one commercial property, so $7,500 a month I made, and it only went up. But here's what's interesting. I lived off the resales of these buildings, and I made about 30 grand roughly profit on them. And I would sell them, 10 per year or whatever. Here, it was all consolidated in one place. And in 16 months, 17 months, we sold that building. We bought it for $2 million. We spent about $100,000 cleaning it up and releasing it up. And then we sold that building for $3.1 million after making $7,500 consistently. So to me, it was this profound aha moment realization that if I just did that, commercial real estate investing, all I had to do is learn how to raise money and do bigger checks. I don't have to close on 5 deals, 3 deals a month and chase all these residential deals. All I got to do is, number 5 is better scalability. And now that we're running our investment company, Braid Capital, we're under contract to buy 4 properties. The biggest thing is not to buy wrong properties in the wrong areas, overpaying. All comes from experience and having mentors. I was very lucky to have many mentors. Every time I wanted to buy a different type of property, like a retail property, I'll find the best retail broker or retail investor, buy them lunch, get their ideas, and try to execute based on what they believed was the right course of action. On the 4 properties we're buying, the plan is pretty straightforward. Lease them up. We're gonna probably exit 2 or 3 of them to cash out and replenish our cash reserves. And the 2 we're gonna leave for long-term cash flow and appreciation. And that's basically the model. And that's how you scale. And now we have a management company here. We have a maintenance staff. We have a leasing people. And all we do is find value-add assets. We buy them at discounts because they need TLC, they have vacancies. And so essentially, I did that in the residential deals too. I always bought broken, distressed homes, foreclosures, bankruptcies. It's the same business, except you got bigger box. There's a little more complexity to this game. If residential was checkers, right? Commercial real estate is definitely chess. So you have to think 3 steps ahead. You got to think about partnering with people. But I've learned a lot from this business, and I'm very grateful for my mentor who invited me. You know, my issue getting into the business was I was scared. I was scared of the volume. I was scared of the down payment requirements or getting debt of that size. But he let me borrow his confidence. And I'm eternally grateful for him because while I was in the domain of chaos, in fear of losing my money or losing other people's money, he says, don't worry about it. I'll walk you through it. And he held my hand through that transaction. And once I was done with it, I was like, man, it wasn't that difficult. To some degree, it was actually even easier than residential because the leasing and management is so much easier than running 55 or 100 houses. So the dream of owning 100 houses was definitely the wrong dream. I don't want to poo-poo the residential business, by the way. It's a great business. I did really well in it. But commercial real estate is just a different level of engagement, and you can build true wealth doing it. If you want to learn more about commercial real estate investing, please check out our Value Add Network community. We have a lot of investors, operators, brokers, realtors work together on adding value to each other. If you're interested, please connect. We'll be happy to meet with you and show you what we do. I don't know everything. I know very little. But what I know is that proper commercial investing in the right assets in the right areas will beat residential investing any day. I believe in it because I'm a student of the game. So if you want to learn the game, please connect. I'll be happy to let you borrow my confidence.